Let's talk about all things HELOC loan related, or home equity line of credit. You've heard me say on other videos that getting started in real estate investing, you've got several opportunities to tap into some money to start making your initial investment. So maybe you've got 100 grand sitting in your bank account just ready to buy something, or maybe you've got a 401k you can cash out of, or a property that you can pull some money out of. And along those lines would be a home equity line of credit. And so today, let's break down, is it a good idea to use a home equity line of credit to buy an investment property? When should you use it? When shouldn't you use it? What is it? Let's explain it all today. Let's dive in. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we get into today's video, make sure that you take a minute, hit that like button, leave us a comment below, and don't forget to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9-to-5, gain financial freedom, and grow wealth through real estate. So what is a home equity line of credit? What is a HELOC loan? Let's find out the ins and the outs and then discover when it makes sense to use it for real estate investing and when it doesn't. So I get asked this question all the time of, should I use a HELOC to invest in real estate? And the answer is, it really depends. But what is a home equity line of credit? Basically, this is, in a nutshell, taking the equity that you have in a property and putting that property up as collateral to a lender to allow you to tap into that equity. So if you bought a home for, let's say it was $500,000 and it has appreciated over time and now it's worth $700,000, you've got $200,000 in equity in that property. So essentially, if you sold it, that would be $200,000 cash in your pocket at the end of the day. And a home equity line of credit allows you to tap into that credit and that equity that you have in the home to go out and use that money to do whatever you'd like with it. Some people use those for home renovations, for business opportunities, to pay for college, put in a pool, real estate investing, you name it. This is now essentially a credit line that you've got on your home that you are able to use almost as a credit card to go out and make purchases happen. So the reason I say this is like a credit card is because you may be approved for a $200,000 or $100,000 home equity line of credit, a $100,000 HELOC. Now, the good thing about this is you don't actually have to pull out that $100,000 and put it in your bank account right away in order to use it. You've actually got a line of credit there that allows you to draw on it as you need it, replace it as you need it, and you're only paying on the interest of the money that is actually out of the account at that time. So this is unique because you could have that $100,000 line of credit, but you only need $25,000 of it. You pull that $25,000 out and you're only paying interest on the money that you've actually pulled out. And when you pay it back, you stop paying the interest. And the unique part about this is it's actually for a window of time. So home equity line of credit may last for 5 years or 10 years, depending on your terms. But this is just something you can access over time to reuse over and over again, as long as you pay that back and agree to the interest. So a home equity line of credit does come with an interest payment. And so with a HELOC, you will be paying interest on the money that you've pulled out. And one thing to note, and we'll talk about it here, is that that interest rate can adjust on you according to current mortgage rates and prime rates out there. So it can adjust. There are some instances where you can pay a fee to keep that rate locked in at a certain number. So to break it down, a HELOC is a line of credit on your house according to the equity you've got within the home that allows you to tap into that at any time, pay back the interest, pay back the sum, and then you can continue to reuse it for multiple things and multiple projects. And the bank doesn't care what you're using it for. They just need to know that they're gonna make their money back and that you're gonna be paying the interest. So let's talk pros and cons of a HELOC. Pros for a HELOC are, number one, it's less upfront cost than a traditional cash out refinance. Now, a cash out refinance, you would go back to a lender and you would have them evaluate the equity in the property. They give you a whole new 30-year fixed rate mortgage or 15-year, depending on what you're looking at. And they then write you a check for the amount of equity within there, and you can use that money for whatever you want. That costs a lot, and there's lending fees and appraisal fees and everything that goes into that. It can cost you several thousands of dollars to make that happen, along with potentially increasing the interest rate on your current home. So with a HELOC, you have much lower fees up front. It's typically just a few $100s. You will still have an appraisal done on the house to measure that equity that you have within the property, but to use those funds and to tap into those funds, it's usually only a few $100s. So this is something that is less expensive to use the money, although it will come with typically a higher interest rate than a full-on cash out refinance, but upfront costs out of your pocket are much cheaper on a HELOC. Pro number 2 for a HELOC is that you are only paying on the money that you actually pull out and use for whatever that project is, whatever that investment is. So on a traditional cash out refinance, like I was just talking about, when you pull that money out, you get all of that money. It goes into your account and you're paying on all of that. You're paying an interest on a whole new mortgage for that whole piece. But when it comes to the HELOC, if you get approved for $100,000 or $200,000, but you only use the $20,000, you're only paying the interest on that $20,000. So again, it's a unique opportunity to tap into that money as you need it and only pay interest on what you're actually using. Now let's talk about a few of the cons or some of the downsides to consider when it comes to using a HELOC. Number one, I touched on it a little bit, is that it does actually come with a higher interest rate than it would for a traditional cash out refinance. So if your cash out refinance interest rate or the standard 30-year fixed rate mortgage is, let's say 6%, then you may be seeing a HELOC rate somewhere in the 10% range, but it's gonna fall somewhere in between a traditional 30-year fixed mortgage and a credit card. So find that number in between there. That's typically where you're gonna see those HELOC rates. And on the other side of that, they can adjust. So a HELOC interest rate can adjust according to the prime rate, and so it can move on you a little bit. So that's something to be aware of. You may have been qualified when the HELOC rate was 7% and you were really excited about that, but when you actually pulled the money, it's at 10%. So be aware of that. It can shift on you a little bit. You can pay some fees up front, a little bit more out of your pocket up front to actually lock in that rate so that you get that solid rate throughout the period that you're using that money. But make sure that you're aware of that, the fact that it's a little bit higher interest and that interest rate can slide on you a little bit and make it a little bit more difficult for you when you're trying to do some cash flow scenarios as far as real estate investing. And con number 2 is that it is a little bit more difficult to do a traditional refinance on your home if you've got a HELOC out on that. It's not impossible, but a new lender would have to come in and subordinate to that HELOC, basically saying that that was in place before them and they would have to do a refinance according to that. So it limits some of your options. And so unless you're gonna pay that HELOC back pretty quickly and get that closed out, then a cash out refinance or a traditional refinance on your property just to get a lower interest rate may be something that's a little bit more difficult. So talk with local lenders, find out a little bit more about that before you pull out some money on your home or any of your investment properties, to make sure that if you got in a situation where you needed to do an actual refinance on your property, that HELOC is not going to impact that. Now let's talk, when does it make sense to use a HELOC for real estate investing? And when does it not make sense to use a HELOC for real estate investing? So when it does make sense is when I would say that you've got the ability to pay that money back. If you're going to use that money for a flip or a BRRRR method, which is buying that property, renovating it, renting it out, refinancing and repeating. We've got videos on that if you don't know what that is, but essentially you want to be using that HELOC money and have an opportunity to pay that back over a shorter period of time. So again, a flip scenario is great because you're gonna pull that HELOC out, have a few $100,000, whatever it may be, go purchase something cash, do the rehab, get the money back with your profit, and then pay off that HELOC quickly. So you're not paying that higher interest rate for long periods of time or having to deal with the adjustability of those rates. So if it's for a flip scenario or for a BRRRR method, I think getting a HELOC is a really great option. Again, people use those for renovations to their homes, starting a business, all those pieces. Some of those can be good for you as well, but you need to have a plan to pay it back quickly. Now, when doesn't it make sense to use a HELOC? This is where I would say if you were looking to purchase a long-term rental property and you're looking to access that money to use it as a down payment for that property, that might not make the most sense to pull that cash out with a higher interest rate that can adjust on you, that you don't actually have a plan to pay it back quickly. So if you pulled out $100,000 and you use that as a down payment for a long-term rental property, the odds are you're not going to be making $100,000 of cash flow to pay that back within a year or 2 years, you're probably gonna be drawing that out over maybe a 5 or 10 year period or even more, and you're gonna be really taking it hard on the interest rate. So I wouldn't necessarily use it for that. There are maybe some scenarios where that makes sense and the cash flow makes sense and you can pay it back quickly, and you've got bigger plans to do a cash out refinance later to pay off that HELOC. There's some scenarios where that could work, but I would just say if your initial plan is, hey, I want to use this to get into my first real estate investment and it's going to be a long-term rental, I wouldn't use a HELOC here. It just doesn't make sense. It tightens up the cash flow and you're gonna be paying that interest for a very, very long time, and that's going to eat into any of that cash flow that you've actually gotten. And it could be 5, 10 years before you actually see any returns on some of that investment. So use it if you've got a shorter term plan to get into something, turn it quickly, flip it, BRRRR method, something where you're gonna get that return on your investment rather quickly. That makes sense. If it's something that you don't have the ability to pay it back within a year or two, it might not make the most sense, and you may explore other options like a full-on cash out refinance to pull out money over a longer period of time. And that way you're not really taking the big penalty as far as interest, and you're just paying it back over time with the traditional mortgage. So take those into consideration. I don't think it makes sense for your first real estate investment, although there can be some scenarios if you've got a great plan for it, but if that money's gonna be locked up, it doesn't always make sense to jump into a HELOC. A HELOC is a great way to tap into the equity that's just sitting there in your home doing nothing for you. I encourage people all the time to tap into that equity and put it to work. You should be investing it back into real estate, investing it somewhere to make sure that you're actually earning money off of that. If it's just sitting there, it's nothing more than a bragging piece to tell all your friends when they come over and see your house that you've got hundreds of thousands of dollars of equity. To me, that means that you're not actually stewarding your money well and using it to invest to make more with what you've got. So a HELOC is a great way to tap into that, use it for some shorter term investments that you've got a plan to pay things back. A last minute note on HELOCs is that it's actually a great idea to go get approved for it because it doesn't hurt you and you're not paying any interest when you get approved for it. With a cash out refinance, you get all that money and you start paying on it right away. With a HELOC, you're only paying as you pull that money out. So why not explore if you've got equity in a property, getting approved for a HELOC, and you don't actually have to do anything with it right up front, but that way you're at least ready for when the right deal falls in your lap. You've been watching these videos for some time and you've started to run some numbers and you see the right deal come up. Now you've got the opportunity to jump into it and use those funds, and you don't have to start the process right then and there. You're ready to jump on opportunities. And I say it all the time, the people that have those funds ready to go are the ones that are going to take advantage of those awesome opportunities. So doesn't hurt to go out there and just see what you can get. You've got that line of credit that you can tap into, use it like a credit card, pay it back, and that balance is always there for you to tap into and replenish as you need. So I hope you enjoyed today's breakdown of what is a HELOC, when to use it, when it makes sense, when it doesn't make sense. If you liked today's video, make sure that you hit that like button. Leave us a comment below with any questions you might have, and don't forget to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow wealth through real estate. We'll see you next time.